Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, Deutsche Bank was under pressure. What is Deutsche Bank? It is the largest bank in Germany, which is the 4th largest economy in the world. Now, the stock fell more than 10% at one point today, and we really need to discuss what does this mean for the banking system for the entire globe, and also what exactly happened and why is it even a concern. Now, if you go and Google this story, you're gonna get real confused real quick unless you got like a master's in finance. That is because the primary reason that the company is under fire, or at least the investors are panicking about it, are because of credit default swaps. This is the exact same thing that got us into the 2008 crisis. Now, thankfully for you, I am a former teacher and I have a whiteboard. Technically it's a blackboard, but I have the dark mode, so that's just how I like to use it. So I'm going to explain exactly what a credit default swap is, why it matters, and why this is setting off a little bit of a panic, or at least an eyebrow raise in Germany and across the globe. Because again, if the fourth largest economy has an issue with their largest bank, for us in the US, that would be Chase going under, or at least being under threat of doing so, which right now it is not. But that's an issue, right? We just saw what happened with UBS and Credit Suisse. We had our own thing with SBV. This is starting to look like a thing. So let's go ahead and get into credit default swaps, what they are and how they work. All right, let's go. All right, let's go ahead and break this down. So credit default swaps, credit default swaps. All right, so credit, in this case, we're talking about debt, right? And what happens when you default? Default means you cannot pay back those debts. So you can't pay. And then swap. What do we mean by swap? Swap means you get to transfer that risk. So basically, if someone cannot pay their debt, then I want to be able to transfer that risk. That's what a credit default swap is at its core. That's what it means. So let's take a look at what this would look like in practice. Let's say that you are looking to invest, right? And you want to invest in something that's stable, that you think is safe, and is going to pay you a pretty good, consistent amount. Well, in Deutsche Bank's case, let's just say DB, they can give you a bond, right? We've talked about bonds before, because bonds are loans that are made between people and companies. It could be people and a government, so a government bond, you can do that. And in this case, you can say, look, here is $1,000, and Deutsche Bank is going to pay you, let's just say 5% every single year. At the end of 5 years, you're going to get your full $1,000 back. That sounds great. That's basically what a bond is. But what happens if, let's say that we don't know how safe Deutsche Bank is. I don't know if they're going to pay back all the money that I want them to, and I'm a little concerned, right? So if I'm doing that, then I'm going to consider what is called a credit default swap. I'm going to consider insurance, basically bond insurance, that if this does not happen, if I can't get my money, then I've got a fallback. And that is where you get these CDSs. CDS, credit default swap. And what this is basically like insurance. I'm going to pay some money. Let's say if I was going to get 5%, let's just make this 1% here. Okay, I'm going to pay them 1%. And if Deutsche Bank cannot pay me for any reason, and let me see if I can change colors here. If Deutsche Bank can't pay me, then this credit default swap will pop into gear and I'll make sure I get my money back. That is how a credit default swap works. Now, what happened in the case of Deutsche Bank? Well, the problem is this. The price for these CDSs rose by 2% in the last like 24 hours or so. So if the cost of insurance is going up for this particular company, then what does that say, right? If your insurance, think about anything, right? If you get into a car accident, your insurance goes up. What does that say about you, right? Probably, you got into an accident, you are more likely to get into another one, or your driving record may not be all that great. Same thing with any insurance product. So if your insurance goes up, on the fact that you can't pay something, that is a concern. And that is what is going on with Deutsche Bank right now. All right, so hopefully that helped to explain the entire situation. Again, credit default swaps are basically debt insurance, which is bond insurance. If a company can't pay you back, you want to buy a credit default swap to protect you against that. Well, again, as I mentioned, whereas car insurance, home insurance, if you're living in a flood zone or a wildfire zone, they're probably gonna, you have to pay a bit more for that, I would imagine, which means that you are more at risk. So the cost of their credit default swaps, I always kind of get those tongue twisted, got way more expensive in the last few hours. And that says to me and everybody else, hey, if you have an issue, you need to tell us now. And if I'm the person creating those CDSs, I'm going to jack up the price because I think there's a larger risk in that area. So that is essentially what happened. Now, what is the difference between this right now and what happened in 2008? Well, first off, unfortunately for us, this story is not over yet. So we are, 3 weeks into this entire banking crisis, and it's kind of weird to say because every week something crazy happens. But the main difference is the companies that create these CDSs. Back in the day, 2008, it was large insurers like AIG. Well, back then, when they created these insurance products, they didn't have a requirement to have X amount of dollars on hand. So think of it like any insurance company that works, right? We all pay our car insurance. We don't have a wreck every day, thankfully, right? But they have some money on the side. So should they have to pay something out, they've got the cash there. Well, AIG was selling a whole bunch of CDSs as well as other investment banks and other insurers. And when those companies couldn't pay and that insurance had to kick out, they didn't have the money available. And that is when they went bankrupt and everything started to cascade. And then the other issue was a lot of the people that were investing in these CDSs were pension funds. They were city governments because these were supposed to be safe. You're investing in insurance of what you think is a solid company. So that is basically what happened. Everything kind of cascaded from there. So that is what's going on with Deutsche Bank right now. Their insurance costs are going up. That has investors concerned because it's the largest bank in Germany, and which is in the fourth largest economy in the world. I'm not, going to go into panic mode. Just because your insurance goes up doesn't necessarily mean that the bank is about to fail, but understandably so. If I've seen the 16th largest bank in the US, I've seen Signature Bank, I've seen UBS and Credit Suisse, I get it, right? I totally get it. Now, this is still not time to panic. You're probably looking at me like, why? Right? If you just mentioned 2008 and again in the same sentence. Remember, we got through those too. But the main thing is, this is a banking issue. I would not invest in bank stocks. I've said that before. And then a lot of these banks haven't been good beforehand either. If you go look at a chart for Deutsche Bank from like 2008 to 2019, they ain't been all that great either. So just throwing that out there, okay? So, as always, it's not time to panic. I didn't panic during the pandemic, and that was considerably worse. So, this is a financial issue. It will work itself out. The question is, how long is it going to take? All right, that is it for me. I will talk to y'all on Monday. We're going to drop a new members only video. It will likely come out on Monday. I got my parents and family coming in. I'm barbecuing, so I'm probably going to have my hands full. But we are going to have a jam-packed video, so make sure that you are in the members only. You can do that by clicking the link right here and going to the comment section and just leave a comment. Let me know what you think. Was it easy? Could you understand it? Don't need to explain it again. Feel free to let me know. All right, that's it for me. I'll talk to you later. Bye.